What's up, guys? Welcome to the multi-dimensional trading video series. I'm gonna do a brand new video series for you guys. Um, for whoever wants to learn, whoever wants to grow, whoever wants to see how trading is done. I'm going to show you how to actually do it and stay objective, because that's really all it really takes to make funds consistently on a consistent basis. Is staying objective and not biting off more than you can chew. Basically, not to over leverage, right? So right now we're currently looking at the Bitcoin um, Bitcoin chart, the screen. It's currently dropping at the moment. It could go back up, but right now we are looking at what I like to refer to as a bear flag, right? You see how it kind of looks like a flag here, and then the candle that is coming down looks like a pole, right? So you'll hear traders from time to time say it looks like a bear flag. Well, this is what they are referring to. Um, it's a chart that has basically sold off, that's broken structure, and kind of climbed slowly back up right into the sell wall. And then that's when it tanks. And that's what we kind of caught right here on Bitcoin here. We had a nice sell-off, we had a slow climb back up, and a sell-off. So we're taking advantage of that pattern, and we're took the sell. As you can see, two sold here, and it has a nice flush down. And remember, as long as we stay objective, we're always going to catch um, the trend. We're always going to catch the plays, as long as we stay objective. So what is this? It's an object, right? We can see these candles fell down pretty hard, kind of broke this recent structure. Slow climb up, planted basically an objective bear flag, and then we took the trade. Okay, so that's just Bitcoin here. So let's go over to the NASDAQ, because that is one of the funnest ones to trade. One of the fastest moving assets you'll probably ever get your hands on is futures contracts, NASDAQ, S&P. This is MNQ, which is the micro NASDAQ. So let's go ahead and get into the micro. I'll take off all of those drawings so we can start from scratch here. Let's go down to the 1 minute chart. And the reason why we start at the 1 minute is because you really don't need more than the 1 minute chart to make money on the NASDAQ, because it's very volatile. It's super duper volatile. So what that means is you could make money very quickly on the NASDAQ. You don't have to sit in trades for hours. Now you can, but you don't have to, because a lot is going to happen within those hours. Sometimes you can catch a trend that goes up for hours. That's possible. It's possible in any asset. But with the NASDAQ, you will receive volatility. Um, this is Friday's chart. This is what happened on Friday. So as you can see, this is basically the session on Friday. The market does open at 7:30 my time. So this is about market open on this candle right here, 7:30, and then the end of day right here at 2 p.m. or 3 p.m. my time. Okay, so going from 7:30, basically the stock market open, to 3 p.m. What we normally do on the NASDAQ, and this is pretty much all you really have to look for on most assets, just about any asset that you trade, we're just looking for a support at a very key zone, or resistance. That is pretty much all we're looking for. Um, when it comes to trading assets, that's really all we're looking for. That's why I say just about any assets. I mean, there's land, there's houses, there's other things, right? That aren't they're on charts, but they're not graphed just like this, where we can just type in home sales, right? But on stock trading charts, futures, crypto, bonds, ETFs, treasuries, we can read them all in the exact same way. So what you learn here um, on these lessons, you will be able to apply to anything that you want to trade, that you can trade, that you can chart, that you can log onto a broker, buy or sell, or trade or swap, right? You'll be able to understand what you're doing by reading the charts correctly. So this is the micro E-mini NASDAQ 100 futures, um, March 2025. So front month contract or current contract. Um, this is what we traded on Friday, and this is all we are looking for. What we do, and this is one of the easiest things to use, is this EMA up here. What does EMA stand for? That's Exponential Moving Average. Okay, we use the 369-day Exponential Moving Average. That's what we use. And that right there gives you pinpoint accuracy as to where the market direction is going or to where to take your trade. Okay, I mean pinpoint accuracy. Just for reference, if you price came down right to this blue line. This is your 369-day EMA, this blue line. As price came right down into it, that was the perfect spot to take the buy, as you can see. Perfect spot to take the buy, right there. Right on the 369-day moving average. Okay. We have a ruler here. So say you entered there, and we took profit here or here or here. I mean, you went from about 278 all the way to let's say 378 from this first one right here, right? That's 100 points. That's 100 points. 100 points on the E-mini NASDAQ is very, very lucrative, right? And this is during the morning session, so you get these nice large swings during the morning session. So you do the math on that on E-mini NASDAQ 100 points. You're on 2 lots. That's times 4. That is a $400 run right there. Okay, that is very nice gains to make on something that doesn't cost you very much money to play with. Doesn't cost you very much time to invest. It's just a small amount of time of day to catch that one or two good moves, and then you're pretty much set for the day. And then whatever happens for the rest of the day, let it trend or um, go off, because obviously if you bought here, it would have just kept going. We're not greedy. We're not gonna ask for a whole bunch. We're just gonna take what the market gives us, set a goal, get in, get out, and live to fight another day and come back for another run at it. Because it's so volatile, you're going to make the funds rather quickly. It is a temptation to get greedy. However, it's best to just take a little bit, take the lowest hanging fruit, and live to fight another day. Gotta stay objective if you want to continuously make the trades that make money, right? Just have to stay objective. And what do I mean by that? We're looking for an object that price can run into and give us support, which is, see how price ran into this line? It supported it. It's like a floor right here, right? And then it bounced right off of it. This is like a basketball or a beach ball or something like that, running all the way to the floor and then bouncing off of it. Here's the floor, bouncing off of it. Someone pushed the price all the way down. It ran into this object, which is the 369-day EMA, which is acting like a floor, and bounces off of it. So what did we do? We bought on the floor and then rode it up. Perfect, perfect bounce. This is what staying objective means. You're looking for clear objects to take your trades on. If you can't see the objects where to take that trade, then it's not a trade to take. It's as simple as that. So learning what the objects are and then taking the trades from the objects is what we're going to learn in the multi-dimensional trading series. Okay, so that's what we're going to learn. That's what we're going to learn. It's going to be a series of 10 videos. This is video number 1. So as long as you guys pay attention and practice, paper trade, stay consistent. It's repetition is how you get strong and how you build skills in anything that you do. Repetition is basically how you're going to win every single day. You just repeat the same exact setups over and over. And that right there is how you basically start to print money. Because the money printer is going to work the same exact way every time you turn it on. And as long as you understand that, you're set. This is one setup. We trust the 369-day EMA. It is it's an exponential moving average, which means it's an average of the last 369 days on the 1-minute chart. Now, remember, we can use this exponential moving average across multiple time frames. Okay, so I'm going to take you guys to the 4-hour chart so I can break down the trade. Okay, here we go. So this was Friday. This was 4 a.m. in the morning. This was before we had this was also during the 7:30 open, right? Objectively, you can see the 369-day EMA right here. See that blue line? Price bounces off of it. Price bounces off of it. This is like a floor. Every time price gets pushed down to it, it bounces off of it. This is on the 4-hour chart. Okay, we're looking at multiple dimensions. So what is a dimension? A dimension is basically a measurement of something, right? Whether it's height or width or length, right? Or time or area. It's a dimension, right? We're looking at a measurement um, of the chart, of price action, of volume, of where is it physically being located? Where do we have that physical objective floor or that physical objective ceiling is what we're looking at. That's what we're looking for. And if we can find those things, we know we can take our trades from there and make successful trades almost all the time. Okay, no strategy is 100%, right? But this one is something that's going to give you a very high win rate to the point where if you did lose, it does not matter because the next objective trade that you take is going to make up for that and then some. And that's the point of how you stay consistent. Just like any business that you do, if you had inventory, you're going to get returns, you're going to lose product, you're going to have theft. So maybe you lose 10%. But as long as you win way more than what you lose, you're definitely going to be in profit, right? So as you guys can see, it pokes onto this line 3 times. Okay, one down, next 4-hour candle, next 4-hour candle. This is the one that set it off. This is the one that set off that huge move, right? I mean, we went from 214 to the bottom all the way to 418. That is a lot of points, right? To put that into perspective, once again, 219 points from the top to the bottom. Now, you do that on paper, 219 times about 2 lots, which is $4 a point. That's $876. I mean, that is just staying objective, catching the lows, and just letting it go. Okay, and how do we catch the lows? We're looking for the 369-day EMA on the large time frames to know where the floor is. Okay, so within this 4-hour candle, we went down to our 1-hour. This was that bottom of that 4-hour candle right here. That's that wick right there. Happened around 5:20 in the morning. Okay. It opened at 4. It opened at 4 around this time. Came down. That was the bottom of it. You don't see it on the 1-minute chart, but when you go to the 4-hour chart, that's the bottom of it. I'll put a line right here so you guys can see. Put the line right there, and then we go back to our 4-hour chart. You're gonna see that right there was the bottom. Okay, we had that nice poke right there. That was the bottom, and then we bounced from there. You can see that we were bouncing on top of this floor. We broke above it, bouncing on top of it. Broke high, bouncing on top of it. Came back down, bouncing on top of this 369-day EMA. This was the floor. If you bounce the ball, that's where it would bounce from. If you bounce the ball on the floor, it would bounce again. If you bounce the ball with even more pressure, it would bounce even higher next time, right? And that's what happened. More volume, more market participants came in, and the ball got bounced really, really hard off of this floor. So we can go back down to the 1-minute here. Just to show you guys real quick. That was the bottom of the 4-hour. This is where you could start to understand where you could get in for trades. And we had that huge run up. Very, very nice. Now, if you missed this for some reason, where was your next objective trade? That 369-day EMA on the 1-minute. Came straight down to it. Hit it. Took off. And it did not come back for the rest of the day. But we don't even need all of those points. We only really need 50 to 100 points and we're done. That's it. And when you know you get the 369-day EMA bounces, you gotta run for a long time. You got the direction. You get a bounce off the 369-day EMA, there's no point of looking for short trades to go the other way to bet that it's going down. You have it. If this was turned the other way, you would want to be short, right? If this was going up to this 369-day EMA and it bounced from it, you'd want to take a short trade. And it usually would run the same exact way. But since we're long, we'd buy. We'd go long. We'd eat towards the upside. So this right here will be our first lesson. If you guys have any questions or comments, drop it down below. Like, subscribe. I will see you guys in our next video. We'll have the multidimensional trading video series, video number 2, coming soon. So, like I said, if you guys pay attention, if you paper trade, if you practice and repeat, basically repetition consistently, you'll understand how this happens every day. It does not stop. It's a very consistent machine, and you'll see it very easily. In our next lesson, we will do that soon. I will see you guys in the next video. Peace.